7/28, 2013, 8:51 a.m. Pacific Standard Time. This is a weekly chart of the S&P 500. We can see that throughout the period before entering summer, or after we were just getting close to enter summer, we were down here at the bottoms because this date right here was exactly 6/24. This is where that weekly bottom up process has happened to the 4 weeks with the narrow range movement up. We're getting a little bit tired, but we did make the highs. This was the pullback. This is exactly where we have gone, is parabolically up. So when you take a look at the last 4 ascending weeks up, you have that reversal, because you do, which means that either we pull back here to 1640 and get support and trade back up higher. However, we're halfway through the earnings season. Seasonality, August is the dog days of summer in markets. Volumes will be lower. Prices can go down on low volumes. They can go up in low volumes in the broader markets or the broader S&P 500 index. So what we're going to do is take a look at what the lower, and remember this volume here, what we're going to mainly look for is when, see, it bounces off the bottom, but it's still negative and throughout the calendar 5-day week. It's 5 trading days right here. And when we started out, it opened at 1694. The high was 1698 on that weekly level with the low of what? 1676, where it found support and bounced. So one of the things that we're going to talk about is where we would get below this half bar right here. And there is no confirmation in reversals. These are only pullbacks from the highs, but we're extremely overbought in a short-term cycle, going into a seasonality change and how September will trade. Rebalancing September and October. So yes, we're going to have another pullback, but when we do get it, you know, just like, see, this in this part of the calendar year, you got a pullback, but you had to go and they rallied it up. But look at the pattern. 1, 2, 3. Here's 4 weeks up. We make that high, and we have that wonderful reversal from 1687 down to 1560, and then made the last, you know, higher high. So the exhaustion of the high and the commitment of money. Now, listen, we're halfway through the earnings. They're going to be very volatile for the next couple of weeks. Some of the biggest bellwethers are out of the way, by the way. So as we take a look, we're going to be looking for the same kind of 4-week rally with the distribution. We did not get a big one when we called the top up here. This particular top is an exhaustion high in the index. It's going to take a lot to get it up, but it can go to up there, let's say around that 1710 area. However, the volatility and confirmation would say that we always have to have a greater weekly distribution in 5 trading days to say that we could say, hey, we're going to do like we said it would do from here to here. 1560 is exactly what our analysis was. We have the live analysis on the site, or go to your YouTube channel. Do it right now. One of the things I'm going to say about this top starting this Monday out is that, guess what? 7/28, so tomorrow's 7/29, and it's the end of the month. Portfolio addressing, what does that mean? People come in and buy going into the new month. Now, with the scorecard on the earnings, they're not across the board yet at 6%. They're lower than that. And that is the truth. So we still have a lot more earnings coming in. We're going to get the scorecard. We'd already had given the analysis that earnings would be weaker in the July quarter. The last quarter, a lot of companies marked their earnings down relative to their current prices. So the volatility in the short term in the next 5 to 10 trading days can increase. So we're going to look and see what the upside volatility would have an immediate reversal. So that the higher that we inch up at some point on a daily chart, and it'll look like this. It'll start with the 60-minute. You can see the 60-minute right here, 1698. It's always got to start like this on a 60-minute level to know what the daily levels. But see, every time we popped, we sold back down, but we popped right back up. That's how highs start to get put in. I'm going to conclude the S&P 500 with a lot more S&P 500 earnings to come out in the next calendar, which is going to be starting on 7/29 through this week and the following of next week. And once we get the full scorecard mathematically, we're going to know what we should do and how we will plan our intraday trades, how we will have iris positions overnight, how we will have other overnight positions, whether they're so it always starts out like this. So if I'm getting, but the market comes fighting right back. But we're still at 1691. We have to, but you see, look at that 60-minute distribution. See, so this is the volatility here. This is that support level from here to here. Still had a reversal, but the minute it got there, boy, oh boy, it's right back up here at 1691. It's going to have to close above 1696. Okay, so we'll see what happens on Monday. This is the S&P 500 update. The daily chart I'm going to conclude is you can see, well, that's just a daily top, and the 10-day moving average is at 1687.69 at the moment. So these are going to be the support levels. If you break below that, well, that 1662 area or 1664 area, right on top of that 20-day moving average 1663. It'll change from day to day, but right now it's right there. That's going to be a good support level. Then if we were to break it, though, the underliner, the red one, is 1644.63. That's your 50-day simple moving average for the public now and what they're going to do. So we're going to take a look at the exhaustion high and how a reversal starts here and ends up from here to here at support and then rallies back up in the bull, makes the high. But then that volatility reversal can really hit the market in September. We could stay narrow range bound, but we still have all the earnings. I'm concluding the S&P 500. I've updated it for our new worldwide prop traders around the globe and lots of other people. Here it is. So this is going to be the price levels right in here, and a good washout from an overbought level would be healthy for that money on the sideline to get in.